I'm going to begin with the portion of the program related to innovation. And there were 3 topics associated with this. One was how to innovate, and I think I'm going to do that last, but how to position your company for investment by a strategic investor, and how to prepare for purchase by a major player. So I'm going to cover those first 2 issues fairly quickly, and then depending on how much time I have in my 20 minutes, we'll have some discussion about innovation. So I'm going to go through a variety of slides here, and this is not a guidebook or a primer of Investment 101 by any stretch of the imagination. But what I wanted to do was just have some topics up here, for all of you to think about as to when you're positioning a company for investment, what you should be doing. So the first one, and some of these things sound, rather simple, but I do a lot of reviews of companies who are looking for investment, and I can tell you, these are up here because people do not do this. So, if you follow some of this, you're going to have a much better investment interaction than if you don't. So identify what you do and who your existing customers are. How do you or should you be making a profit? Because in some cases you're not profitable yet. You're still in the first stage of the company. And identify clearly what your various revenue streams are. List your assets. And here again, your assets can be people, your assets can be technology, your assets can be actually your strategic vision. So you should be able to identify all those things and talk about them. What's your business strategy? And here again, generally the person who's listening to you is going to want to know if you're really focused on products, if you're really focused on some type of customer or service relationship, if your expertise is the way you operate. So looking at those 3 definitions and trying to pinpoint one of them as a core competency of yours is really going to lead the investor to have more confidence in what you're telling them. How do you align with potential partners? And here again, because this is about strategic investors, they're very different than investors who are private equity firms or venture capitalists or banks. Strategic partners are very different. And do you complement what they do? In other words, that your business combined is 2 and 2 makes 5? Or do they already have some type of a competency and they might be interested in you or you're interested in them because it's an additional revenue stream to the existing business? Some of the things to also consider as you talk about strategic investors is you might get into discussions as to whether this is a merger of 2 equal businesses, or at the end of the day, is it really going to be that one company is more looking like an acquirer of the other company? And you need to think about these things before you go out into the marketplace and talk to people, because you might be unprepared for some of the discussions unless you think it through. Here again, think about what the strategic partnership is about. Who you bring to the party, who they bring to the party. Do you have a lot of name brand clients that would benefit the strategic investment? Do you have a very strong management team, or do they? Do you have a strong balance sheet? Do you have a balance sheet at all? Is it totally negative? But these are, you need to think through your own situation and then the people that you're targeting as your strategic partners to talk to. And here again, identify businesses that are a strategic match. Some of them might be your competitors. They do what you do, they know what you know. And here again, going back to that, does 2 and 2 make 5? A lot of people just look at businesses inside their industry, but you should really look at the opportunity for businesses that are outside your industry, because they might have a need for what you do also. And they just haven't gotten to the point either in their business plan or in their strategy to do it themselves. So their organic growth not happening might be the opportunity for you to go in and add on to their competencies. And then, you have to look at whether you're looking at large companies or, small or medium-sized enterprises. Do your homework. Investigate what these businesses are, who the target business is, what they're about. There's data online now. There are services, certainly throughout the world, like Hoover's, where you can get very specific, performance and clearly even information on, who the executives are, if there's a board of directors or advisors, who those people are, and obtain data through your own business contacts. There are no 6 degrees of separation anymore in this world. Generally somebody knows somebody else associated with one of these target businesses. And some of the questions that you should ask yourself, because it will save you time, have any of these companies made strategic investments in the past? It's pretty important. If you're knocking on somebody's door and they don't even know what you're talking about, you're going to have a harder time convincing them that you need to do something together. And have those, if they've done some, have they been successful? Because here again, if you go into a business who has had a few different strategic relationships and all of them have been failures, they're probably not going to be as open, to talking to you. Another thing is find out in advance whether they're already familiar with you or others, that or on your staff or your boards or so on, because it really helps in the discussion. So make your contacts. Here again, obtain introduction from colleagues if at all possible. Then create your business portfolio. Accentuate your assets, but don't oversell. Don't say you do something that you're not yet doing. So position yourself honestly is basically what that's all about. And if you have sensitive issues, especially if you're talking to a competitor as a strategic partner, make sure that you think in advance about what those issues are, because you don't want to go into a meeting and fumble and mumble around because they're starting to ask you questions about things that you're feeling uncomfortable at that point about disclosing. It might be patent information that's not public. So think in advance if you have things that you don't want to answer, and have a reasonable explanation as to why you're not going to share it before you go into the meeting. At the presentation, here again, be prepared for hard questions, because they are going to ask, especially in the cases where you're asking for an investment as opposed to a merger or something like that, they're going to want to know exactly what's going to happen with their money, and you should have answers prepared associated with that. And then, as a follow-up, be prompt. The longer you wait to answer any open issues, the less interested, the person is generally going to be. Some parting considerations here. Does your business already have a good reputation? If not, I would suggest don't go knocking on anybody's door. You might as well just close the business or give it away to somebody, because it's not going to be a successful conversation. Fix the problem and then go out for money. Is your product production ready, or is it still a prototype or a beta? Be clear about what that is and what the needs, of the strategic partner might be. Is your management team established, or do you have a lot of holes in your organization chart at this point? If you have a capitalization table because you've had either angels or some seed money already, make sure that your capitalization table is up to date. And when I say, is it messy? I've seen some situations where investors wouldn't invest in a company just because there were so many phantom stock options and warrants and 5 here and 20 here and 15 here, and some of them had voting associated with them. There were just obligations that the new company did not want to get involved with. So they liked your plan, they liked your product, they liked your people, but they said, this capitalization table, it needs to be cleaned up before I'm ever going to invest here. And some other things, do you have an existing board of directors? Are they included in these strategic discussions? You need to be aligned with your board as to what you're doing. So that was pretty quick, and I'm going to be even quicker with this. How to approach an investor. So this is not a strategic investor now, so it's a little bit different. This can be somebody, anybody, as I say, a VC fund, a private equity fund, a bank, whoever. So identify some investors who have already invested in your space. And the reason you want to do this is because, and it's a little bit of a practice type thing, but you can go to people that understand what you're about and have a conversation and get a pretty good idea as to whether your presentation is meaningful or if it needs to be changed quite a bit. So they're a little bit of a, I guess, a guinea pig for you to talk to and see what their reaction is. Find out though first before you even talk to them. Do they all invest in whatever stage company you are? If you're a startup versus if you already have some revenue but you're not profitable, or if you're at the stage of profitability, they understand the stages of those businesses, and you should find out, if somebody, if they don't invest in startups, then really don't go bother talking to them, because you're pretty much wasting your time. Sometimes they have revenue minimums. You might have some revenue, but they might want $1 million already in revenue, and you only have, 400,000. You might as well not talk to them because they're not going to be able to help you. Do they invest outside of their own country? It's another issue. A lot of times investors only want to invest in the area that they're familiar with and feel that they have some ability to participate in the success of the company. I'd say, one of the other things before you approach an investor, have your meaningful business details in order, have them packaged in a way that they look professional. Make sure that you include at least, your profit and loss data, whether it's at the company level or if you have it by, which products make money for you versus which don't. Certainly have your financial results available for the current period. Generally, historically, 2 years if you've been in business that long, but just about everyone is going to want at least a 3-year forecast. And that can include things that you don't do today, but if it is a product that you don't yet have in the marketplace, you should clearly identify that for them. And here again, you should have your costs and revenues currently broken down and what your cash flow situation is. You should identify colleagues who can provide introductions to whoever these target investors might be. Once you're introduced to them, and generally the first conversation is going to be over the phone. So ask questions to learn what they're interested in. And this is really important because if you listen, to what they tell you, you will be able then to prepare your presentation that's tailoring your selling points to their needs. And you'll have a whole lot better conversation than if you're just talking from your perspective and trying to sell them something. Try to look at other companies that might be there in their portfolio. And you can say, well, you already understand about this. Well, here's what I do that's similar to that. And here again, you'll have a lot better conversation. And then once again, always follow up promptly to address any open issues. And definitely, take the time either with a formal thank you note or some acknowledgement of some type for the time that they've given you. So with that, maybe we can do the innovation ideas, as part of the Q&A, but I don't want to